Hey everyone, and welcome back. Today we'll be doing another deep dive looking at the capital markets and trying to figure out what they might look like in 2025.
Sounds good to me.
And to help us with this little adventure, we've got this really interesting report from S&P Global Market Intelligence.
Oh yeah, this report's great.
Yeah, they've really laid out some fascinating trends and potential opportunities. So let's just dive right in.
Yeah, let's get to it. One of the most interesting things I saw was how there are these two different stories playing out right now in the market.
Oh, really?
Yeah, like on the one hand, you've got issuance bouncing back.
That makes sense with monetary policy easing up, right?
Exactly. And it's definitely getting a boost from that. But at the same time, debt markets are just booming.
Really?
Oh yeah, investors are just flooding back in.
Wow.
But on the other hand, equity markets are being much more cautious.
So it's like two different speeds almost.
Yeah, totally.
Well, since we're talking about this debt resurgence, let's look closer at that. The report mentioned U.S. corporate bond issuance has spiked.
It's huge. I think it was something like $1.56 trillion
Why?
in just the first 3 quarters of 2024.
That's a massive jump from the same time last year.
Yeah, last year it was only at 1.16 trillion.
So it seems like investors are really eager to lock in those yields while interest rates are still high.
Absolutely. It's all about locking in those high yields while they still can. Interest rates are expected to go down, so everyone's rushing in to buy bonds and get that fixed return before it drops.
Makes sense. It's like that basic supply and demand thing, right?
Exactly. And it's not just the typical low-risk corporate bonds that are in demand either.
Oh, really?
Yeah, even high-yield bonds, which carry more risk, obviously.
Sure.
Those have seen a huge increase in issuance, too, like over 70% higher than last year.
Wow. So they reach what, like 260 billion?
Yeah, something like that.
So does this mean investors are more comfortable with taking on more risk these days?
It seems that way. I think it shows how hungry people are for returns. They're willing to take on that extra risk if it means a chance of better returns.
That's interesting. So for our listeners, this could be a good sign that they should think about adding some high-yield bonds to their portfolio.
Potentially.
Of course, they should do their research first and understand the risks involved.
Of course, always important.
But speaking of risk, there was something in the report that really surprised me.
Oh, yeah. What was that?
It was about hybrid debt. Remember all that stuff with the Credit Suisse AT1 note back in 2023?
Oh, yeah. How could I forget?
You'd think investors would be running away from hybrid debt after that whole debacle.
Right.
But the report says it's still pretty popular.
Yeah, you know what that is. That's investors weighing risk versus reward.
I see what you mean.
They see those higher yields compared to regular bonds.
Especially in a low interest rate environment.
Exactly. And they're thinking, hey, maybe it's worth the extra risk.
So it's a reminder that there are all sorts of different investors out there with different strategies and different levels of risk tolerance.
For sure.
And it highlights how important it is to really do your homework and understand what you're investing in.
Couldn't agree more.
All right, so let's move on to another interesting area, IPOs.
Okay.
What's fascinating is that stocks are hitting new highs, but IPO activity seems to be lagging behind.
Yeah. What's going on there?
Right. It doesn't really make sense on the surface.
Yeah, it seems like a disconnect.
So the report pointed to a bunch of factors that are creating this kind of perfect storm.
Okay, like what?
Well, even though they've come down recently, interest rates are still pretty high.
Yeah, that makes sense.
That always makes investors a bit nervous.
Yeah.
And we've also seen some market volatility.
Right, that never helped.
Plus SPACs, those special purpose acquisition companies.
Oh, yeah, they were huge a couple of years ago.
Exactly. But they've really declined.
So that's taken away a big driver of IPO activity.
Right. And of course, there were the elections recently and all the uncertainty about new policies.
Yeah, that definitely throws a wrench in things.
So with all that going on, it's no wonder companies might be a bit hesitant to go public right now.
Totally understandable.
Even though IPOs in the U.S. were up this year, we're still way below the peak we saw back in 2021.
Yeah, that was a crazy year. Do you think we'll ever see that level of activity again?
It's hard to say. 2021 was kind of unique. Interest rates were super low. Retail investing was booming.
And there was so much excitement around all those tech IPOs.
Exactly. So while we might see periods of increased activity, I don't think we'll hit that peak again anytime soon.
Yeah, the market's a lot more mature now, and the factors driving IPOs have changed.
Speaking of changing factors, let's talk about the Fed.
Oh boy.
It's been quite a year for them. After all those aggressive rate hikes, they finally started cutting rates toward the end of 2024.
What a roller coaster.
Right. What do you think the big question on everyone's mind is right now?
Well, I think everyone's wondering just how far will they go?
Yeah, how far and how fast will they keep cutting rates?
Right. They're walking a tightrope.
Because they're trying to support economic growth,
Yeah.
but at the same time, they don't want inflation to get out of control.
Exactly. It's this delicate balance they have to find. On one hand, inflation is cooling down.
Which is good.
Right. But on the other hand, the job market is still super strong.
So they're getting mixed signals.
Yeah, it's a real puzzle.
So how are they going to decide what to do? What are they looking at?
Well, they're keeping a close eye on unemployment.
That makes sense.
If unemployment starts going up, it could mean the economy is weakening.
And that would probably make them cut rates more aggressively.
Right. But right now, with the job market doing so well, they'll probably be more cautious.
Yeah, nobody wants to see inflation come roaring back.
No, definitely not.
It's amazing how all these different factors are connected, you know? The Fed's decisions have an impact on everything.
Oh, yeah, totally.
Bond yields, investor sentiment, the whole market, really.
It all ripples out from there.
Well, speaking of investor sentiment, the report talks about how people are cautiously optimistic about 2025.
Cautious optimism, that's a good way to put it.
But there are also some potential problems on the horizon. Can you tell us a bit more about that?
Sure. There's definitely a sense of optimism, especially about the U.S. economy. People are feeling pretty good about the potential for growth. I think the recent elections have boosted confidence, too.
People hoping for some pro-growth policies from the new administration.
Right. But at the same time, there's this undercurrent of uncertainty, especially with some of the policies being proposed.
Like those ideas from Trump on trade and taxes.
Yeah, exactly.
Yeah.
Some people are worried those policies could actually make inflation worse.
And push up bond yields.
Right. And that would create a less favorable environment for investors.
So it's like this push and pull between hope and worry.
Yeah, investors are excited about growth, but also a little nervous about the risks.
It sounds like the next few months are going to be crucial.
They definitely are. We'll have to see how things shake out.
Okay, so now I want to talk about something that's super exciting and maybe a little scary at the same time.
Oh, what's that?
AI.
Artificial intelligence.
Yes. Everyone's talking about it. The report talks about how it's having a huge impact on the capital markets.
It really is. It's like this massive wave of investment, unlike anything we've seen since the internet boom.
So companies in every sector are rushing to jump on the AI bandwagon.
They are. They're trying to figure out how to use AI in their businesses. And they're not afraid to borrow money to do it either.
So all this investment is creating a lot of buzz, but it's also making some people nervous.
Yeah. Are we headed for another tech bubble? That's the question everyone's asking.
It's hard not to think about it when you see some of these AI companies with such high valuations.
I know it's giving me some serious dot-com era flashbacks. Back then, valuations got totally out of whack.
Right, like they were based on hype more than anything real.
Exactly. And we're already seeing signs that investors are getting worried.
Like what kinds of signs?
Well, short interest in tech stocks is going up. And inflows into those big tech ETFs are dropping.
So some people are pulling their money out.
Yeah, they're getting cold feet. They're worried that all this AI hype is going to end badly.
It's like everyone's suddenly an AI expert at parties now.
Yeah.
You know, they all want to talk about the next big thing.
It does make you wonder if things are getting a little overheated.
Right. But here's something I found really interesting and kind of surprising. In the middle of all this AI frenzy, TMT companies.
Technology, media, and telecommunications.
Yes, those companies are actually increasing their dividend payouts. It seems counterintuitive, right?
Yeah, you'd think they'd want to hold on to that cash to fund their AI projects.
Exactly. But the fact that they're paying out more in dividends suggests they're really confident about the future of AI.
Like they believe it's going to be a huge moneymaker in the long run.
And they're willing to share some of those profits with investors.
It's a bold move, for sure.
It definitely caught my attention.
Yeah.
Okay, so let's broaden our perspective and look beyond the U.S. The report also mentions that global dividends are surging.
They are. It's a global phenomenon. Dividends are expected to grow by like 5.6% in 2025.
Wow. So that means they'll reach a total of $2.34 trillion?
Something like that, yeah.
So what's driving this global dividend boom?
Well, a few things, actually. Strong corporate earnings, for one. A lot of companies have healthy balance sheets right now.
And they want to reward their shareholders.
Exactly.
Are there any specific sectors or regions that are really driving this growth? Anything our listeners should be aware of?
Yeah, definitely. Some of the traditional dividend-paying sectors like banks and energy companies.
And automotive too, right?
Right, those are expected to see slower growth in dividends. But other sectors are picking up the slack.
Like which ones?
Semiconductors and software companies. They're doing really well, and their dividends are growing fast.
That makes sense with all the tech growth we've been talking about.
Exactly. And geographically, the Asia-Pacific region is looking really good for dividend growth, so there are opportunities out there if you know where to look.
So even though the landscape is shifting, there's still ways for investors to find those dividends.
Absolutely. It's all
Mhm.
about adapting to the changing market.
It's interesting as we've been talking about all these trends and opportunities, I've noticed something kind of strange.
Ooh, what's that?
It seems like the whole conversation about sustainability has kind of disappeared.
Hmm. You might be right. It's not getting as much attention as it used to.
Right. Like a few years ago, everyone was talking about ESG goals and climate change.
Yeah, it was all over the news.
Exactly. But now it's all about AI and who's going to be the next big tech giant.
It does feel like the focus has shifted.
So do you think all this hype around AI, especially with all the money companies are borrowing to fund it,
Yeah,
do you think it's taking away from those ESG goals? Like maybe companies are so focused on AI that they're forgetting about sustainability.
that's a really good point. It's possible that the sheer potential of AI, you know,
Yeah.
to revolutionize industries has led to a kind of a shift in priorities.
It's like we're so excited about the future that we're forgetting about the present.
In a way, yeah.
It seems kind of ironic, right? Because on one hand, AI could actually help us solve some of our biggest sustainability problems.
Yeah, totally.
Like it could help optimize energy grids or develop new materials.
Even revolutionize transportation.
Exactly. But at the same time, all this AI development is using up a lot of energy and resources.
Right, and it could even be making social inequalities worse.
So it's this weird paradox.
Yeah, AI could be both the solution and the problem.
Exactly.
Yeah.
And I think the question we all need to be thinking about, how can we make sure that all this technological progress doesn't end up hurting the planet and society?
It's a tough question, and it's going to require a lot of careful thought and planning.
We can't just rush into the future without considering the consequences.
Exactly. We have to be responsible.
So for our listeners, what are the key takeaways here? What should they be thinking about as they navigate this crazy world of capital markets?
Well, I think the main takeaway is that things are always changing.
The market's constantly evolving.
Right. There are always new opportunities, but also new risks.
So investors need to stay informed and be ready to adapt.
Exactly. And remember those big drivers we talked about. Interest rates, inflation, the Fed's actions.
They all have a huge impact on the market.
They do. And don't underestimate the power of AI. It's going to keep transforming industries.
In creating both opportunities and risks.
Absolutely.
And in the middle of all the excitement about growth and technology, let's not forget about sustainability.
Right. We can't just focus on profits. We have to think about the long-term health of the planet, too.
Okay, so as we wrap up this deep dive into the capital markets, any final thoughts for our listeners?
Just keep learning. The more you understand about the market, the better decisions you'll be able to make.
That's great advice. Knowledge is power.
Mhm.
And this report from S&P Global Market Intelligence has given us a lot to think about.
It has.
So to everyone listening, thanks for joining us on this deep dive into the world of capital markets.
It's been a pleasure.
And remember, stay curious and keep exploring. Until next time.